In the energy quadrant today, taking a look at the August crude oil futures contract, which was down 10% on the lows, actually down 10.14%, so a little bit more than that at 97.43. But we ended up finishing almost 10% lower. We got a little of that back, but didn't get much above that down 10% area on the close today. Now, today was not even the worst day of the year, despite the double-digit losses on the lows. March 9th of this year, crude oil fell over 12% in one session, but that, of course, was only 2 days after reaching the recent cycle high of 130.50. So a little bit of overdone trade getting sold off in that particular day's price move lower. Now, on the highs today, it wasn't just a straight down day. 111.45 was up over 2.75% from yesterday's settlement of 108.43. That 111.45 was the high print, and that's the price action for the course of the day. And a lot of that pressure came from the recession fears that we're starting to see play out in the market. Yields are falling, and the talk of a recession bringing fears of less demand for crude oil. Yields today fell dramatically. 2-year fell 3 basis points, 5-year yield fell 9 basis points, 10-year yield fell about 9 basis points, and the 30-year yield fell about 9 basis points. But not only that, the curve flattened to the point where the 2s, 10s yield curve spread, which is the one a lot of people look at to indicate a potential future recession, fell from +4 last week to -1 today. But the dollar strengthened, and that's also negative for commodities. We get dollar stronger, we get commodities lower as a general historical correlation. Now, a big jump in the dollar tends to weaken commodity prices, and we had a big jump in the dollar today. The dollar had its best day against the euro currency since March of 2020, but also rose 1.3% against the British pound, 95 basis points against the Canadian dollar and the Swiss franc, and 35 basis points against the Japanese yen, further weakening commodity prices, including crude oil.